Hi everyone. Today we will be discussing about expense ratio and exit load in mutual funds. So let's discuss what is an expense ratio. Expense ratio is an annual fees that fund managers and funds charge to their shareholders. It includes management fees, administrative cost and other operational expenses. The lower the expense ratio, the better it is for investors. What are the effects on returns for expense ratio? When expense ratio is more, suppose take an example, 1% is an expense ratio. That means 1% of your invested amount will be charged as a fees. So ultimately it affects to the overall profits. Generally expense ratio ranges from 0 to 2% for different mutual funds. So let's have comparison of funds. Investors should compare the expense ratio of similar funds to make an informed decisions to ensure that they are not paying more to the funds manager as a expenses charged. So let's discuss now the importance of expense ratio in mutual fund. The number one point is the cost control. Lower the expense ratio allows more of the funds returns to the investors. Second, investment longevity. Even a small difference in expense ratio can have a significant impact on overall returns for a long period of time. Suppose there are two mutual funds, one is 1% and another is 0.9%. Difference might be 0.1% in between these two mutual funds. But over a period of time, when you see on the returns, it will have a major impact in the returns because 0.1% is also a very big amount over a time period of time. So now let's understand what is an exit load in a mutual fund. This is another important term which we need to consider in order to decide the best mutual fund to invest. So exit loss is a fees that investors have to pay to the fund when they redeem their investment in their mutual fund before the specific period of time. So now I will give an example. There is a time frame for the exit load. Suppose take an example that 1% of exit load is charged if you redeem the invested amount within 12 months. Suppose I have invested now and after 3 months I want that money back. So if I am redeeming in 3 months, so 1% of a redemption amount, suppose I am invested 1 lakh and after 3 months I am removing for 30,000. So 1% of 30,000 will be charged extra, additional to the expense ratio. Expense ratio is commonly charged. We are withdrawing before the time frame. So this withdrawal amount will be charged with 1% extra as exit load is 1%. So different mutual funds have different mutual exit loads and the time frames are different for every mutual funds. So we need to have a look at in the exit load, what percentage of exit load they will charge and what is the time frame. So now significance of exit load in the mutual funds. Long-term orientation. Exit load promotes a investor to invest in the mutual funds and keep their funds in in the mutual funds over a longer period of time. Because this helps the in funds, this helps the fund manager to properly, effectively manage their funds in the mutual fund and ensure them a greater rate of returns, and the stability will be good if exit load is more. Exit load time duration is more, the stability of a funds will be more. So because of that, depends on the mutual fund manager, they will keep different kind of time frames for the mutual funds as per their ability, how can they improve their profits for the funds. So let's consider now factors to consider when choosing a mutual funds. First is one what we discussed is an expense ratio. Compare the expense ratios of different mutual funds. Lower the expense ratio, better is the fund. When we come for exit load, lower the exit load is better, and we should also look into the time period of a exit load. Risk analysis. Every mutual fund will be having a risky factor, whether they are investing in large cap, mid cap, small cap, or a basic corporate bonds and all things. So we should look at expense ratio, exit load, risk analysis. All these three factors will have a major impact on choosing the best mutual funds where you need to invest. So let's have a conclusion and take key takeaways. Investment efficiency. Understanding the expense ratio and exit load helps the investor to maximize the efficiency of the investment portfolio. Long term planning. Considering these factors contribute to the disciplined long term investment approach, ensuring financial goals are met. Education and awareness. You all know that awareness of all these terms are very important because most of the people, without knowing properly about these terms, they're just randomly picking some mutual funds and investing, which causing them paying more amount to the funds and reducing their profits. So just make an understand, lesser the expense ratio, better will be the investment. Lesser the exit load, better will be the investment. Both these factors should be less in your investment for the mutual funds. Thank you and have a great time. We'll come up with a new video tomorrow.